Okay, Vijay, you gave us a topic that you wanted to get into today, which is how prices move in a bull market and why. So it sounds like you've kind of put together a framework for bull market price action, which is appropriate, coming from the author of The Bullish Case for Bitcoin. So let's hear what you got.
Yeah, so hopefully I don't drag on too much, but I talked a lot about these cycles in my book and where these cycles come from. And really why does the price of Bitcoin go up at all? I think it's basically a fundamental imbalance of supply and demand where you have growing adoption and as you have growing adoption, the price is essentially just tied to growing adoption. Monetary goods, the price level is basically strongly correlated to the number of people who hold the monetary good. They're not valued based on cash flow like real estate or stocks or bonds. So that's why the price rises in general. It's just you have growing adoption. But then Bitcoin's interesting, right? You have these cycles. Adoption, if you didn't know about Bitcoin prior to Bitcoin existing, if someone had asked you if there's a new monetary good, how would the price increase as adoption increased? People might think it might increase sort of linearly with adoption. As adoption grows, it just grows linearly. But that's not what we see. We see these cycles, right, where you have sort of a plateau and then the price starts creeping up, and then you have this huge climax, and then you have a crash. And I talk a lot about this in my book and why this happens. Basically, in each cycle, you have a cohort of people who are reachable in the cycle, and as more and more people are reached, that you get more and more profit seekers, and you get more and more leverage near the end, and then you run out of people in the cycle. So the first cycle, for instance, was basically cypherpunks. These are the people, they were reachable because they understood enough about Bitcoin to even consider investing in Bitcoin. Like most average people didn't even know anything about Bitcoin and were not reachable in that cycle. But the cohort grows bigger each cycle. So I've talked a lot about this. What I kind of wanted to talk about a little bit was more price movements within a cycle, because that is not a topic I've really talked about too much. And this might be obvious on reflection, but I think there are three kinds of price movements within a bull market. And the first I sort of call a zone of consolidation. And a zone of consolidation is this sort of price area where supply and demand basically are equal. And what you'll have is right now we have a price that's sort of moving between 65 and 73,000. And what's happened is we're at a price level where you have enough sellers who are attracted by these prices that they want to liquidate some. You have whales who have been around a long time, and maybe in their head they're thinking, if Bitcoin just gets to 70,000, I'm going to sell a certain chunk. And the way I kind of describe this, I have a tweet from a few years ago where I talk about this like waves crashing against a glacier, where as the price goes up, the waves continue to crash against the glacier, but eventually the glacier will fissure and a big chunk of ice will come off. And what is that big chunk of ice? It's like the price gets to a certain level where some whale is like, I need to sell some. And so that's when you start to get these zones of consolidation where you have a price where buyers and sellers are sort of matching demand. Someone like Saylor comes along and he's like, I want to buy 5,000 more Bitcoins, but there's some other whale who's like, I want to sell 5,000 Bitcoins. And in these zones of consolidation, you can still have pretty large price movements, right? You can have Bitcoin go up $5,000 or drop $5,000, but it sort of stays in this zone for a prolonged period of time. That's where I think we are right now. We're in a zone of consolidation. The next type of movement in a bull market is price discovery. The zones of consolidation only last as long as there are sellers who are happy to sell at that price point. And eventually you run out of supply and there's some whale who wanted to sell and they've gotten rid of everything they want to get rid of at that price point. And then there isn't really any sell side to match the demand, the organic buy side demand. And then you get into this sort of open field of price discovery where the price is basically searching for that next zone of consolidation. What it's searching for is the next psychological level where some large set of sellers are ready to say, I want to sell. So once we get out of this zone of consolidation that we're in right now from 65 to 73K, it's it's completely unclear where the next zone of consolidation is. No one knows. It could be at 80K, it could be at 90K, it could be at 100K. But you're in price discovery mode where the price starts shooting up very rapidly because there's just not enough liquidity on the supply side. And the last kind of price move inside of bull market is what I call air pockets. And what happens when you're in price discovery mode is that you have speculators on the sideline who are, they're not really organic demand, but they're just there to sort of trade in and out and juice their returns through leverage. And so what they will do is they'll start borrowing a lot so that they can make leveraged bets on Bitcoin to capture the price discovery.
Right.
And then what happens in those phases is people get over leveraged, they get greedy, and they're like, wow, I'm making so much money, I'm going to borrow even more. And they become very sensitive to any price movements. You get a small tick down and some of these people get liquidated, and then that liquidation forces the price down more and it causes other liquidations. And all of these people who are leveraged get liquidated very quickly in a sort of cascading liquidation. That's when you get an air pocket and the price drops, say 20 or 30% in just like a few days or a week. This is the underlying dynamic that is causing these types of price moves. So when people are trying to figure out, like, why is the price suddenly going up? Why did it crash? Or why is it stuck here? That's what's kind of happening behind the scenes in terms of the actual market participants and what they're doing.
Yeah. I have a couple questions, but go ahead, Sam. And then
I honestly just want to provide some context what Vijay was saying. I think that's a great framework to think about bull markets. And I think he's right. We're in this, I mean, price action shows it, but we're in this consolidation phase. And Hurley, if you could throw up that coins last moved in 1 year or more chart that I had. This is kind of confirms kind of what Vijay was saying. You're seeing this dip, this churn, as maybe people are saying, hey, 70K's, that level where I'm going to take some profits. It kind of peaked at 70,000. You've seen it kind of pop back down to 65,000. And you kind of see that trend in previous bull markets where you see profit taking as it comes up and you see that number drop. And this kind of decreases a little bit when you go further out, 2 years, 3 years, but you see kind of similar trend to what Vijay is saying during these consolidation phases.
Yeah. So I have a couple of thoughts about how maybe we'll see kind of different pattern. Maybe not a different pattern, but different kind of scale as the chart goes up over the next 12 to 18 months. So in the past, let's actually looking forward to like the bear market that will come afterwards, right? We've had 80 to 85% drops after this blow off top, and it'll drop, it'll try to recover, and then of course it'll end up going down, and we all start fighting each other on Twitter and getting frustrated, blah blah blah, with the price, or we just focus and build for the bull market. But the question is, would we possibly see like maybe half of that, like 40%, kind of 50% max on a bear market drop, because we've got more liquidity able to come in through ETFs? If institutions start coming in, they'll kind of, I think they might have this kind of smoothing effect on the dips, because they'll buy and then they'll rebalance. So they'll kind of be buying and selling as it kind of ratchets up, if that kind of large money comes into play. So how do ETFs and institutions coming into the market possibly change what we see in the bull market price action, and then like maybe the bottom of a bear market in terms of percent drop?
I think you're not going to see as far drawdowns. Like, I am a believer in that, because I think you're going to see, certain factors that weren't at play in previous markets, like rebalancing that occurs when the price drops. Say they have 5% allocation, these institutional investors. When the price drops, they'll actually be buyers. And so I think that's a kind of a floor. So I don't know if we'll actually see, maybe we'll see, I still think we'll see drawdowns, because like what Vijay just mentioned, people love leverage at the end of bull markets, and we will see significant drawdowns, and it's still early in Bitcoin's, adoption phase. And so I think we'll continue to see volatility, but maybe just less. But this is already like different. We're seeing the effects of the ETF just by how quickly we've recovered back to all-time highs compared to previous. This is another chart that I have. Hurley, if you could share this one. This is from NYDIG. This is just comparing Bitcoin major cycles of how quickly we've returned back to the all-time high during the bear market. It only took 470 days this time. previously it's over 700 days that it's taken us. And I think obviously the ETFs are a big component of this that have really driven the price faster than previous cycles back up to all-time highs. And so I do think this cycle has the potential to be different. You could take that chart back down. Just because of these factors. I mean, we haven't really seen an environment like this for Bitcoin. You throw into the macro environment, the fiscal spending, just the general awareness around Bitcoin, the education levels are way up. And then just the accessibility of this asset and the players and the money involved this time around. I think potentially we will see maybe a slightly different cycle than what we've seen in the past.
We all like to say that every cycle. It's different this time. But what do you think, Vijay? I mean, we do have some reason to speculate that it might be, like, concrete reasons to speculate it might be different this size, just because of the size of players and the way they buy and sell.
Yeah, so I have conflicting thoughts on this. I do believe over time the top to bottom volatility from top of the bull market to the bottom of the bear market will reduce. And I actually believe that would have happened last cycle if it wasn't for these bankruptcies and all these companies. Mm-hmm. Thankfully, they've all been purged. Maybe there's still some cockroaches under the cupboard, but a lot of the degeneracy that was created by these companies has been blown away. And so I think this cycle is going to be healthier in that sense. On the other side, taking the other point of view, I think human nature doesn't change. And I don't think, the fact that it's corporations buying necessarily helps us. I think some of these corporations have shown themselves to be paper hands, like Tesla, Tesla buying a bunch of Bitcoin and then like paper handing on the way down. But again, taking the other side, some of these flows from the ETFs are price insensitive. You have some of these ETFs now, not just the direct Bitcoin ETFs, but the retirement funds that Fidelity and others are creating, where they have some percentage of their assets going to Bitcoin. And these retirement funds do not care about price.
Yep.
People are just DCAing into these funds, not caring at all through their IRA. Once a month, they put in, say, 10% of their savings from working. And those are price insensitive buys that are not going to go away. So those daily flows are a new source of demand, and I think will become a more significant source of demand that provides a cushion under the market.
Yeah. So this is what I think. I mean, it's because the people who are price, I guess, not sensitive, but are the allocators of those funds, right? It's not the people who are going to be putting the money in, obviously. So they're just going to DCA constantly. But I can see like these institutions that have an allocation percentage in mind, and then they have to rebalance to meet that allocation. They're buying and selling in a much different way. It's not an emotional way. They're not buying with leverage, and it's going to be much more consistent. And if it's like a large amount of capital, which ostensibly it would be for some of these funds, then I could see just the effect on price. It would create a floor, like Sam was saying. So it would kind of smooth things out. And this is how I think you get more capital in. This is how you smooth out volatility over the monetization process, and that will lead to people seeing it as a more reliable medium of exchange, and and you're just kind of marching toward a unit of account at that point.
Yeah, I think we're super early in that too, right? I mean, we've had two BlackRock funds where it's gotten added, huge funds, like tens of billions of dollars in those. You've seen Invesco put a couple in, and but we're gonna see a ton of that. And so that just like passive flows over and over and over again. And we're still just extremely early. I mean, it's this overall theme that I've had is just like, it's not fully integrated into the financial system, not even close. We haven't even scratched the surface.